Thank you for joining us on the Money Wisdom Podcast, powered by Johnson Bernetti. As always, I'm one of your hosts, Jake Dozer, certified financial planner in our Connecticut offices, joined by my partner in crime, Nick Colantuono, also a certified financial planner in our Boston offices. Today, we have an interesting question that I think is on the mind of everyone that comes in to see us. It's this looming concern that very few, frankly, proactively plan for, but many worry about. And a good plan puts worries to bed because it allows us to articulate, is this concern a true issue that I need to address? Is it something that I should be planning for, and how do I do it? And so that's the heart of today's question. If you've been tuning in, or this is perhaps your first time, and you have a question that you'd like a financial advisor to ask, or answer rather, ask us. Maybe visit johnsonbernetti.com and shoot us a message, and we'd be happy to answer it. Perhaps you'll see a video in response to the question that you send in. Without further ado, we have a question from Gary. Gary is a viewer right here in Connecticut, right around the corner in Wethersfield, at least from me. And so Gary from Wethersfield said this: long-term care insurance is so expensive. And that is true, Gary. I've always been in good health, so I'm inclined to roll the dice and do without it. Something I hear a lot. Is that dumb? I appreciate your candor, Gary. I appreciate your willingness to learn. And I appreciate the fact that you're just like, I don't know where to go with this question. And it's a question a lot of folks need to consider. I have a lot of thoughts, but Nick, why don't you kick us off? What is the first thing that we need to be thinking about here in Gary's situation, which is really so true of all of us?
Well, look, to Gary, to address your question specifically around long-term care insurance, you started that question by saying it is so expensive. You're not wrong. I mean, long-term care insurance is expensive, and the reason it's expensive is because the need for long-term care is very expensive to insure against from the standpoint of a company. You know, you think about where our clients are up here in Greater Boston, where your clients are, Jake, kind of the Greater Connecticut area. New England, right? This is probably one of the most expensive places in the country to get care, whether it's assisted living or nursing homes or memory care units. There's a lot of people here. There's a lot of people who need that level of care. And as a result, there's a lot of demand for it. So, you know, we can talk about the numbers, the cost of what it entails to actually, you know, receive long-term care, help. But you know, we've all heard the horror stories there. It's expensive to receive that type of care. And as a result, insuring against it is expensive. But there's no question in my mind that the cost of insuring against it is greater than the cost of not having that insurance, right? That's why insurance exists. But there's always the risk of, well, what if I pay for this insurance and then I pass away having a good dream and I never use it, right? So that is, of course, a valid concern. At the end of the day, there's a lot of different ways to insure against the need for long-term care coverage in the future. And, you know, those vehicles, those solutions have changed dramatically over the last decade plus, just because people see the cost of long-term care and they say, ooh, I don't know if that's for me. I don't know if I can afford it. Right. But Jake, why don't you talk about some of the different options that folks have, whether it's just traditional long-term care or maybe some of these hybrid policies that we see?
Yeah, so there's a few options, and thankfully Nick and I and the rest of our advisors are licensed to be able to offer really every option that comes around. And you know, here in Connecticut, we're certified with the Connecticut Partnership for Long-Term Care, and in Boston offices, it's going to be the same thing for our Massachusetts locations. And so we see all the options that are at our feet. And the options come down to this. Option number one, traditional long-term care policy. Think of this like a lot of the other insurance policies that one may have. Use it or lose it. Think of your car insurance as an example. If you never file a claim, that is the definition of success. Now, what that means is you paid for paper. You just paid for peace of mind and the what if scenario. That is true insurance. That is pure insurance, where you're mitigating risk by shifting it to the insurer, and in exchange, they're getting premium for the cost of the potential. And what that means is you may pass away one day without a claim and you've paid for nothing. But you really haven't paid for nothing, even though it feels that way. You've paid for coverage. And it was probably less expensive than option number two, which is a hybrid option. A hybrid option, flavor number one, comes in life insurance and long-term care insurance option. What that means is a hybrid policy. What happens is if you use it for long-term care, you can tap into the death benefit of a life insurance policy. But if you don't ever use that long-term care insurance, the death benefit just extends to your loved ones. So it's almost like buying whole life insurance, and you add a rider or an endorsement or an additional option to be able to tap into that death benefit for your long-term care if you need it. The benefit to that is the money that you put into it in the form of a death benefit never goes away. It's either good for your heirs or it's good for you as long as you pay the premiums. The downside is you're going to pay extra for that because it's not going away. Option number 3 is a hybrid in the form of an annuity. An annuity can do a lot of things, so we're not going to talk about that. That's a whole different episode. But an option there is you have this sort of investment or insurance vehicle of some sort that, again, has this cash component to it that does extend to you or your heirs in some form or fashion, but can be tapped into for long-term care if need be. And there's a lot of different subsets within that category. And then option number 4, of course, is self-insurance. Choosing to intentionally set either a portion of your existing portfolio or ongoing money that you set aside for that need. Now, certainly this one comes with the most uncertainty because you do not have a policy earmarked for that item. However, it oftentimes is the most flexible because if you have done a good job saving and you can chisel aside 20, 30% of your plan and it not impact your lifestyle and you set that aside for your care, look, if you need it for another purpose, you can access it. And if you don't need it, you can leave it to your heirs. You can access it. Mm-hmm. So those are some 4 common options. Nick, I guess maybe to conclude today's episode, long-term care is certainly important, and a lot of times it's the leading question folks ask. But there's a lot of other priorities in retirement that perhaps should come first. What is the order in which we should be thinking about these priorities, and where does long-term care fit into that?
Yeah, well, look, ensuring and kind of protecting yourself against the what ifs is definitely important, but those what ifs may not actually happen. So you need to think about the reality of your day-to-day situation in retirement. Right. So I think it all comes down to being in a position where you've got a very good plan in place. And what that means is just kind of knowing your numbers, right? Know what's coming in, know what's going out, and know what that difference is. If it's $1,000 or $2,000 a month that you need to be generating off of your assets, or maybe if the income that you have coming in is in excess of what's going out, well, okay, now we can sort of plan around those what ifs. So it's all about taking care and addressing the kind of the situation at hand. Mm-hmm. And then you can get into a world where you're talking about the what ifs and talking about things like insurance. But at the end of the day, Jake, I'm always advocating for our clients that you want to go into retirement where you're reducing your expenses. Right. Oftentimes, if you're going into retirement getting a long-term care insurance policy, well, as you know, it's very hard to qualify for. Mm-hmm. 2, it's expensive on a monthly basis. And 3, those premiums are not guaranteed. So you could be in a situation where you've been paying into this policy for 5, 10, 15 years. And all of a sudden the insurance company comes back and says, oh yeah, we're going to hit you with a 20 or 40 or 50% rate increase. Now, of course you have options. You can either go with the new higher rate and keep your benefit, or you can proportionally reduce the coverage that you have while keeping your premium the same. Right. But you talk about a curveball. There's certainly a lot of what ifs that you need to plan for, but first and foremost, make sure that you've got the day-to-day covered. And how do you know all this without having a plan?
Retirement isn't just about stopping work. It's about starting the life you want. Make sure you're ready with your free Are You Ready to Retire starter kit. Text the word KIT, K-I-T, to 800-757-0436. Text KIT to 800-757-0436 and take the first step toward a future you're excited about.
That's so spot on, is know your options, have a plan, address the things that are for sure, which is you and perhaps your significant other needing to live your life and needing to enjoy it to an extent. There's a reason you saved your money. And don't over prioritize a what if in exchange for you not to get to live the life that you want. There's a balance, but it has to be met within your plan based on all the priorities that need to be addressed. I hope that at least that gets the ball rolling, Gary. I hope that you would reach out if we can help further, and that's true of any and all of our listeners. Again, you've joined the Money Wisdom Podcast with Johnson Bernetti. I'm Jake, and Nick is my counterpart. We'll see you next time.
Investment advisory services offered through JB Capital LLC. Insurance products offered through JN Financial LLC.